If you truly understand investing, you don't try to be smarter than the market. And that's exactly why consistency beats genius. So let's start with today's question. Why does consistency beat genius in investing? Hello, my friends. I'm Fred. Here we talk about investment, business, real life, and money, all with my personal perspective. And today, this is clearly an investment question. The first truth: real genius creates consistency. The first thing people misunderstand is this: if someone is truly intelligent when it comes to investing, that person will naturally be consistent. Real genius is not about trying to predict the market, because that's impossible. It's not about timing tops and bottoms. It's not about believing you are smarter than millions of participants around the world. Real genius is understanding your own limitations. A truly intelligent investor understands that they don't control the market. They don't have perfect information. They can't consistently predict short term movements. And because of that, they choose regular, calm, disciplined investing. Ironically, if someone thinks they are a genius who can outsmart the market, that's usually a sign that they are not. True genius comes with humility. This is a key point. If someone is genuinely intelligent, they are usually humble. Why? Because no matter how much you know about finance, economics, or investing, your knowledge is tiny compared to everything that exists in the market. That applies to every human field, and the financial market is not exception. You may understand balance sheets, you may understand macroeconomics, you may understand valuation models, but you will never have all the information. So, a truly intelligent person does not believe they can time the market perfectly, but at the exact bottom, sell at the exact top. Instead, they focus on process, not prediction. What does the genius investor actually do? A genuinely intelligent investor invests regularly. They build positions over time. They diversify. They avoid emotional decisions. They accept that volatility is part of the game. Yes, they may allocate a small portion of their capital to asymmetric bets. For example, Bitcoin, a specific technological thesis, cannabis, for example, energy, nuclear energy, uranium related companies. That's fine. But notice something important: those bets are never the core of their portfolio. If someone puts their entire capital into speculative ideas, that is not genius, that is gambling. A smart investor protects the base first. Why this question is somewhat caricatural. This question, why does consistency beat genius, is actually a bit caricatural. It sounds like, why don't geniuses win? But that's the wrong framing. Because if someone were truly a financial genius, they would choose consistency. Let's take the greatest example: Warren Buffett, the ultimate case study. Who is the greatest financial genius most people agree on? Warren Buffett. And what did Warren Buffett actually do? He didn't invent complex strategies. He didn't trade every day. He didn't chase trends. He bought Coca-Cola, Gillette, Apple, insurance companies, simple and understandable businesses. He bought good businesses at reasonable prices and held them for decades. That's it. No magic, no magic. No constant trending. No obsession with timing. The greatest genius in finance won by doing simple things consistently for over 70 years. That should tell us something. Where real genius is actually useful. Now, let's be fair. There is a place where genius can truly make a difference, not in investing, but in creating income. A truly intelligent person may build, for example, a successful company, create a new app, develop software, become a highly skilled professional, build a medical clinic, for example, innovating in technology. That's where genius shines. And once that person makes a lot of money, what do they do with it? They don't gamble in the market. They invest it conservatively. They buy ETFs, for example. They buy fixed income. They buy diversified assets. Their goal is not to become rich again. They already are. Their goal is to preserve purchasing power. The illusion of high returns with small capital is this. One of the biggest traps in investing is this idea. I want very high returns with very little money. That mindset is driven by anxiety, impatience, illusion. If you make a very high return on 10,000, what does that actually change in your life? Almost nothing, because it's just 10,000. But a normal conservative return in 10 million changes everything. That's the difference. The market rewards scale plus time, not desperation. The myth of the market genius. Yes, there are people who made extraordinary amounts of money in the market. They exist. But the probability is something like 1 in a million, not 1 in 100, not 1 in 1,000, 1 in a million. And most of those cases involve massive infrastructure, advanced mathematics, teams of researchers, high frequency trading, arbitrage systems, and not a guy trading from his laptop. And interestingly, those people usually don't even call themselves geniuses. They understand the system. They respect risk. They know their edge is rare. So, what the internet gurus don't tell you, the internet is full of people claiming, I beat the market. I found the secret. Do this and do that. But where are the variable long-term results? Most of the time, they don't exist. What exists is marketing, overconfidence, financial gymnastics, complex stories to justify simple luck. Some strategies are so complicated that just listening to them feels exhausting. And yet, many people still fall for them. And what actually wins in the long term run? Let's simplify everything. Consistency wins because It removes emotion. It reduces mistakes. It respects uncertainty. It compounds over time. And genius fails when they become arrogant, ignores probability, overestimates control, and it underestimates randomness. True intelligence is not about being brilliant once, it's about not doing something stupid repeatedly. The core message is this. Let me say this clearly. Consistency is not the opposite of genius. Consistency is the result of real genius. The smartest investors are not loud, they are not flashy, they are not constantly changing. They are boring, and boring works. So, I'll leave you with the same question we started with. Why does consistency beat genius? And maybe the real answer is because true genius understands that you don't need to be brilliant, you need to be disciplined. Leave your thoughts in the comments. Thank you, my friends, for all that you that are watching this video, and I see you in the next one.